G'day, fools. Scott Phillips here from the Motley Fool. I'm our Chief Investment Officer, and I'm bringing you yet another in our ever-expanding series of YouTube videos. This one is our Stocks in Focus series, and this one is all about the stocks you own, you like, and you want to hear about. That's right, we're covering the companies that are simply widest held, most talked about, most known, the ones, as I said, that feature in the news. And frankly, I think it's important for the Motley Fool to have a view on, to share a view on with you, our loyal viewers and sometimes listeners. The fools, I have with me today analyst extraordinaire Kate Lee. G'day, Kate.
Hi, good day, Scott.
And Kate is going to talk to us about, well, if it's not the hottest sector in the market, Kate, I don't know what is. It is buy now, pay later, of course. And it's not the other one that everyone's always talking about, Afterpay, which, as we record this, is the subject of a takeover offer, which might just leave the company you're going to talk about as the biggest pure play buy now, pay later operator in the space. So that's why it's worth talking about. In fact, it's just worth talking about anyway, because it's going places in a big way. The company, of course, is ZipCo, otherwise just called Zip for short. The code is Z1P, I should say, for those who are playing along at home. Kate, let's just start with a bit of a summary of the sector. We're not going to do the whole thing. In fact, for those viewers who want more on buy now, pay later, we've done a few videos. So if you just search BNPL, Motley Fool Australia, in your YouTube search bar, you'll find that. Or just go to our channel and you can look in our playlists. But Kate, let's talk about Zip specifically. Maybe you can tell us a bit about what Zip does, what its main product lines are, why we should care.
Yeah, so Zip is one of the buy now, pay later solution providers, as you pointed out. In terms of revenue and transaction values, Zip is about half the size of Afterpay, and it's the second largest such solution provider in Australia. As you said, so much has happened in this industry lately, and our audience must be pretty familiar with this industry in general, either as investors or as users.
Right.
Just in a nutshell, so they provide the service to let you, consumers, get your product first and pay over the next 4 installments without paying any interest. So it's a win-win strategy for merchants for increasing the size of their revenue, and also for consumers. This is essentially zero interest financing solution. In fact, the concept of buy now, pay later has been around since the Great Depression. So it's not a whole new thing. And as I remember, back in around year 2000 in Korea, where I'm coming from, it was hugely popular among credit card companies to offer
Oh, wow. Okay.
interest-free installment payments over 3 months. So it's a pretty similar concept as you see here. But obviously, the key difference here is that the providers have changed. So this whole buy now, pay later industry is getting this strong tailwind from the shift, the transition into of the payment business onto the fintech companies from the traditional banks or credit card companies. And also, obviously, the second key difference between now and then would be the buy now, pay later solution providers would be equipped with modern technology, so they can now do a better job of analyzing the credit risks of the users in a timely manner. At the end of the day, this is a microfinancing business and payment solutions. So the credit risk management is very important. So that's the nutshell about the industry.
Nice.
More specifics about the Jeep. So I did a bit of research and my homework before recording today. And last year, I think one of the outstanding key developments for this company was that this company acquired a US-based company called QuadPay. So that has increased their addressable market size significantly. And obviously, the US is the big market, so they're getting their step inside that big market. So now the US business is about half, and the other half obviously being from generated from here in Australia. So in many ways, that this business does resemble Afterpay. In the most recent quarter, the company more than doubled its revenue and transaction value, so it is growing fairly fast. However, the level of growth was falling a bit short of market expectations, or rather, these days market expectations are running quite high for these software companies.
Yeah.
And then their bad debt expenses continue to rise, which added to bit of disappointment. So on that day, which was a couple of weeks ago, the market, the share price of Zip closed down quite a bit. But overall, that's what they do. It's sort of like a mini afterpay. They get all that tailwinds, that increasing, online spending or e-commerce. Again, they transition into fintech in terms of payment businesses.
Nice, Kate. That's a wonderful summary. It's been a heck of a ride. And I've got to say, you told me a few things I didn't know already. The first, of course, is that, as you mentioned, from 2000, there was some sort of interest-free kind of installment payments in Korea. So there you go. When Afterpay say they invented the category, there's probably some Korean companies who might say, guys, I think we were there about 2 decades earlier. So I quite like that. The other thing, of course, is, as you said, by lay-by, the whole concept's been around for decades and decades and decades.
True.
It feels to me a bit like Afterpay, Zip, and the others kind of did two things. They brought the tech to the party, and then frankly, they just kind of made it cool, right? Like Flexi Group's been out there for a million years with what's now called Hum, but there was Flexi Rent, and there was I think is the worst brand in the entire world, Certegy Easy Pay. Man, no wonder no one did that. But they were kind of around, right? And to some degree, yes, the product's a little bit different. Yes, they found a different way to market, but these guys have made it cool and made it available and accessible. And maybe that's kind of the key differentiator as to why these guys have taken off. Afterpay, of course, the big one. Zip, I mean, I guess I'm curious. You mentioned, Zip's about half the size of Afterpay. Do you think this is a winner-takes-all category, or is this one where a few players can survive and thrive?
Yeah, surely, I can see there are strong tailwinds. I mentioned a couple, right? Like, people are spending more on the online, and then these millennials or younger generations, they don't, carry many credit cards as we, our generations did. So there's definitely, I don't
I'm a
want
little
to
older
reveal
than you,
my
but
age.
it's kind of you to say our generation. That's very nice of you.
Yeah. Anyways, so a lot of things going for them. So I'm sure this sector, gotta be room for multiple winners.
Yeah.
Before we get into that intensifying competition bit, let's just focus a bit more about market opportunity, which is the exciting
Nice.
part of the story.
You've read my
So
script, Kate. So let's go through the pros and then we'll go through the cons. So if you're considering an investment in Zip, put your bull hat on for me, your bull horns, and give me the pros. What's the bull case? What's the buy case for Zip?
So for any company, right? Number one, the addressable market growth and industry tailwinds, all that, right? So what's the pie? How fast the pie is growing? I mentioned a few things already, but let's focus on the US market opportunity. So so far, although it has been a big thing of the past couple of years, and 1/3 of Americans obviously have used buy now, pay later solutions.
Oh wow.
However, its penetration in terms of transaction value in the total retail spend is
Hmm.
still sitting at around 1% of total consumption. So it's a significantly low compared to the global average of 3%, or here in Australia or in the UK, that's actually about 5%. So you could see the US market, it's not only the biggest market in the world, but also it is the fastest growing market when it comes to the buy now, pay later. So that's number one, right? So as you pointed out, the market is growing so quickly, and also it's really good thing that timely acquisition, right? That they made that acquisition last year. So in that sense, they made the right move. So that's number one. Number two, I mentioned they just doubled their top line, so impressive growth, and in a way, of course, from a small base, they are actually growing faster than Afterpay. So I could see why investors are excited about this company, because it's a small sort of second player. However, it's growing faster, and which led on to my last point, which is the valuations. I mentioned, when you look at the revenue size or transaction values, it's about half, maybe a little over half of that of Afterpay, but the market cap is 1/10. And yes,
Wow.
they do have a
I
bit
didn't realize
more.
the gap
Yes,
was that big.
yeah. So of course, Afterpay, after that announcement of acquisition, they give another big boost onto the share
Yeah.
price. But
Yeah.
by any metrics, any valuation multiples, you could see, like, we call like enterprise value to sales multiples. That's sitting at 15 times versus 40 times for Afterpay. So you could see, this valuation argument. yes, this is the second best, but surely there's some room to catch up in terms of valuations. So those would be the three, I would say, pros and bull case for Jeep.
They're pretty compelling, Kate. You've got a big and growing market. You've got a business growing at triple-digit percentages, which is just phenomenal. And you're right, it's small enough to pay, but it's not a tiny business. As you say, we're already $1.20 in Australia being spent on buy now, pay later. Less in the US, of course, but growing at that sort of rate is phenomenal. And then, as you rightly point out, if you're looking at the buy now, pay later space and you want value, I don't know what we'd call Zip traditional value, but at least relative value compared to Afterpay. It's a pretty nice combination of stats if you're looking for something other than Afterpay. And again, as I said, if Afterpay does go to Square, Zip will end up being the largest pure play buy now, pay later player in the space. So it's well worth paying attention. All right, you've almost got me across the line. Now push me back. Now convince me I shouldn't buy a Zip. What's the bear case for buying shares in Zip?
Okay, where should we start first? So for starters, right, for the whole sector,
Yep.
there are two big elephants in the room, which are number one, intensifying competition, which is always the bad thing. Number two, regulatory risks, right? So number one, intensifying competition. So you see, even in Australia, there are just so many companies doing this buy now, pay later. Obviously, Jeep being the second largest player, I would say it's still considered top tier rather than the second tier. So it has its market position. But when it gets to the US market or global market, where Jeep is trying to expand into, there are big guys, small guys, some combination of banking and Apple, and there's PayPal, Square with Afterpay now. So there are just so many players. So it's getting more crowded. And when the sector is growing faster, as we pointed out, there are surely a place for multiple winners. But I see there are just so many of them. And also, when the sector gets crowded, this also means that you can't increase your fees as easily because you need to compete and you need to provide certain benefits to the users, and you would probably need to spend more to keep up your pace of growth as well. And then there are other factors, and then moving on to regulatory risks, right? So I briefly mentioned that there was a similar offerings back in Korea in year 2000. So I've seen this play, this play. Right?
You've seen this movie before, yeah.
Yeah. So it's not exactly the same. I hope it doesn't look the same, but within 3 to 4 years, you could probably imagine what would have happened, right? So consumption increased a lot, and there was big default, and the government had to kick in, and they had to put in all these regulations to make the economy healthier. And I think in Australia, the governments are trying to step in or at least try to warn the industry that you gotta kind of watch out for this quality checks as you go. So that's been happening. And then also the other side of the regulation is that it's coming from the banks or the credit card companies. They may say, come on, I think already CBA or some of the banks did this for the industry. It's maybe not the what I call it level playing field, right? So it may be unfair. They may feel unfair that some of these emerging fintech companies are less regulated. So there, these two forces will continue to put pressure on the industry overall.
That's awesome, Kate. So you've covered regulatory, you've covered the risk of competition. And I know one thing you've been a little bit concerned about, or at least aware of over the last little while, is that idea of, well, why buy the second place getter? Can you tell me a bit more about that?
Yeah, so in the market, I'm sure you heard that many people talk that, don't buy the second best, regardless of the valuation. Just go for the very best,
Right.
best in the breed. And of course, this doesn't apply when contenders come out with better solutions or some unique features like what you saw for Shopify in the US as against Amazon. But in this case, generally, if the two companies offer pretty much identical services, I would say there's a good reason why people say this. Firstly, it's just generally more costly to catch up with the winners. And some of its competitors, you think about like PayPal, Square, even Afterpay, they are making good sum of cash flows each quarter, every month.
Yeah.
Whereas Jeep is still making cash outflows on a net basis. So obviously, it doesn't help them when it gets to the competition. So that's one thing. And then another thing you need to think about is the I would call it maybe economies of scale, or maybe the amount of the information these leading companies can collect on a daily basis. Maybe you can think of Tesla in the electric vehicle industry. So in this technology world, right, the value of information is very high, and based on this user data, it feeds back to their algorithm or artificial intelligence to analyze, to do the better job of the credit risk analysis, which is actually the core quality of such solution providers. So maybe that explains why Afterpay's bad debt expenses are just at around 1% of total transactions, as against in case of Jeep, it's actually creeping up, but now standing at about 2.2%. So I'm not saying it won't get better. I mean, future is unknown, so it may change. But generally, it just has the winners in terms of economies of scale, in terms of cash spending and all that. And lastly, I would say this possibility of another takeover. Obviously, as traditional banks or payment companies try to include this new feature like buy now pay later as part of their service offerings, I wouldn't say there's no such a possibility, especially Jeep, having this exposure to the US, being the second largest player in the domestic market. Obviously this could be potentially a candidate, but I don't think it should be the main reason for your investment decisions, because you don't know. It's unknown. I mean, it may happen one day, which is a good thing, but you can't completely rely on such a possibility, especially we don't know who's out there or at what prices they will be acquiring potentially this company. So those would be the risks or my concerns.
That's a really good summary, Kate. I hadn't actually thought about the kind of information difference between the two businesses, but as you say with that Tesla example, it's a really, really strong one. And that bad debt expense seems to at least indicate there is a lot of value in just simply being bigger. So that's a really key one. And I got to say that's the, when you think about competitors, man, you want to go up against PayPal, Apple, Afterpay, Square. It's a very tough competitive set. And yet Zip is still growing. As you've said before, 100% a year, very big market, growing fast, doing a good thing. All right. So you had me over the line on the bull case. Now you kind of scared me away with the bear case. Put them both together for me. I'm going to get you to bring your crystal ball out. Now, we're long-term investors at the Motley Fool. We're not going to try and forecast any short-term or even medium-term share price movements. But look out long-term for me. If you were asked, I'm asking you, so you are being asked. If I ask you, do you think Zip will actually be a market beater over the next 3, 5, or 10 years? What do you reckon? Has it got the price, the business, the momentum to be a winner? Or is it likely to fall by the wayside in Afterpay's shadow?
I would be leaning towards on the negative side, as you might
Okay.
have sensed already. Because say like 15 times EV to sales, yes, it is cheaper than Afterpay, but is it really? I mean, on a standalone basis, I wouldn't think it's a dirt cheap. And the competition again is killing the scene as well. And I just I tend to think that if you look back past couple of years, right, the consumption has been surprisingly good because of the pandemic. Ironically, interest rates has been low, meaning that debt financing, equity, market financing has been super easy. So I think there are a number of factors going for the sector, and then we haven't seen the rainy days yet per se. So I think it's time to be a bit cautious. I'm sure there will be winners. I'm not going against Afterpay per se, but I would be a bit more selective per se. Yeah. So in that sense, I would say Jeep would, in my personal view, be an underperformer compared to the overall market.
Beautiful. Thank you, Kate. See, viewers, I told you she was smart. A wonderful review. Thank you, Kate, I know you put hours and hours of research into this one, mate. So really appreciate the effort. Really appreciate you spending a bit of time with us to really lay out the business case for Zip, where it is, where it's going, and some of the pros and cons for our viewers to make up their own minds. There you go, fools. If you've enjoyed this video, and I'm sure you have, make sure you do like and subscribe to the Motley Fool's Facebook, I was going to say, the Motley Fool's YouTube channel, and do make sure you hit the notification bell. That way, when we release our new videos, they will come straight to your notification tab in your browser or wherever you get notifications. We're going to put plenty more out like this. Stocks in focus, stocks of the week. We've got a brand new series coming up soon. I won't give away too much, but you'll see that's coming out sometime soon. Our media appearances, the whole lot. There's plenty of great free content from the Motley Fool right here on YouTube. So make sure you do like, subscribe, and hit the bell. In the meantime, thank you, Kate, and thank you, viewers, for watching. Until next time, Fool on.
Full on.